Hey everyone, it's January 15th. We got the morning market rundown. Let's dive into this price action. So we're pulling back to this key level from this anchor VWAP, from this handoff from last year's volume weighted average price. You can see how this acted as a magnet, and we found a source of demand here to push us up higher each time so far. So we put a handoff where we found a source of demand, and we're pulling back into this region. We have our year-to-date volume weighted average price here, where we can see on the intermediate time frame is our month to date. We're trading underneath that year to date, and we can see the year to date volume weighted average price high. So, and our 2-day VWAP, which will be a 3-day VWAP, and our week to date VWAP today is our VWAP low for the year. So, what we're looking to see is for some potential price action scenarios, and we have the 5-day moving average that's declining. So on this CPI news, we get a nice quick rally up into here, or so we gap up. Potentially, maybe we could flush out a little bit, reclaim that month to date, year to date, and then start to rally back up. Then that could potentially then now generate a rally to a new high here. And while that data rallies, this data starts to drop off. So if we rally right up to it, we'll already be even, maybe run up a little bit more, right? But even so, we're even from the data that we're dropping off. So when we're even, that data that's going to start to flatten out, and then perhaps we could get a little pullback as data drives in here, and then we rise. It could start to help to make that 5-day moving average get going here. So it would look something like this. So rally to a new high, pulls back above a flat to rising 5-day moving average. We get some strength up in here, and it could be looking to participate in that 587 with a potential stop underneath that higher low. So that's a potential scenario that could play out with the CPI, right? Keeping in mind here on the daily time frame that as you rally up into this area, you can see that's just in that 20 and 50-day moving average region. So that could be an overhead supply source, an overhead source of supply. You could see here we got these levels at 594.47 and 597.63. So if we do gap up, are able to reclaim the year-to-date volume weighted average price, perhaps then we could catch a trend up into this area where we have some key levels, maybe even just get a break into the 600, flush out, and then from there, that would give the opportunity for these moving averages to start to turn tide, like the 5-day moving average we just mapped out. So take a look something like this down in the future. Oh, I flipped them. So they could look something like this. And we could get some evidence that the sequence of lower lows and lower highs can now shift to where this could be a rally up, pull back, and we can make a higher low down the road with some trend alignment of the 20 and 50-day moving averages. So that's a potential scenario. Perhaps this fails and we just gap into or don't even gap up at all. But if we don't break above this year-to-date volume weighted average price and get back above the 5-day, that's going to continue caution. And if we push up or just fail and we start to break underneath this week-to-date volume weighted average price, perhaps we could see something like that too as well, and start to see a follow through of these lower lows and lower highs on the daily time frame. So it's just something to be cautious of, and really the guideline I'm monitoring is to see if we break and hold underneath this 2 week to date volume weighted average price to see if we just start to get this flush really from in this area. Okay, so maybe fails here, makes that new low, rallies back up, starts to get trapped. So it could really look something like this. We get rallied, make this new low, get excited in this 5-day moving average, then just look something like this. Continues down. So that's a potential price action scenario monitoring for the SPY. Let's get into the QQQ. Try to make this one quicker. It's going to be very similar. So we dropped out some mapped out scenarios here where we're looking for this to break up, reclaim, see the anticipated 5-day moving average, reclaim this VWAP, which is the Fed announcement. So we're looking to reclaim that, rally back above and get going. We rallied into the year-to-date volume weighted average price, and we just failed. So we could see this potential scenario playing out to the downside. So this is irrelevant, right? This is irrelevant. So we'll get rid of this too. So here we have a same scenario, lower lows and lower highs on the daily time frame so far, right? I don't have the VWAPs from set up right now, but same scenario on the QQQ. Maybe we could rally, get the CPI information into the year-to-date volume weighted average price into the Fed area. Maybe flush a little bit, get some profit taking, and then get back. So watch the daily VWAP, get back underneath daily VWAP towards the end of the day. This resistance could then start to become support. And that's the potential long scenario, very similar to the SPY. And if we don't trade above the year-to-date volume weighted average price and the 5-day moving average here, here's our 5-day that we mapped out. So change this to the 5-day. If we don't rally into, maybe rally up into here, fail, get back into the week-to-date, 2-day, reject it, and we see something like that. So as the potential price action scenarios monitoring over the next couple of days. Right now, the 5-day moving average is guilty until proven innocent, and the daily time frame is showing lower lows and lower highs. So maybe this could be 1, 2, 3, 4, 5. Now we can start to get the push to 1, 2 pullback, 3, 4, 5 over the next couple, right? Or that could be the potential scenario. So we could, and that would be what we're talking about with the SPY, where we could rally up to the daily, pull back a little bit, make that higher low, and then get going. And then we could start to see this trend alignment on the 20-day moving average, trend alignment on the 50-day moving average. So just like we mapped out on the SPY, you could see these trends align with the price action, giving us evidence of higher highs and higher lows. Right, the primary trend stays intact above this 200-day, but as the intermediate shifts and we're trading below 20 and the 50, there still is some room down to that 200 into the primary trend. Hopefully this was helpful.